So I hope till now we clearly have an understanding of what is a balance sheet, what is an income statement, and so on. And now we're going to see how does one uses the income statement analysis to defend or justify his project when the management has a different opinion. So this is more going to be a case study kind of a thing. So we're going to do a case study on using income statement to justify the project profitability. Obviously, first of all, as a project manager, you should be clear in your mind that is the project profitable or not. And for that, you need to have certain computations done, which should be readily available with you, so that when the management has the other opinion, you can defend your project. So let's look at this case study. So let us assume a project manager, Mr. X, is being evaluated for his ongoing project, which has been posting a reducing net profit % every quarter. So now Mr. X project is showing a negative net profit, or you can say a loss every quarter on quarter. So the management concluded that since the project profitability is going down, it is better to discontinue the project. Now let's see how Mr. X is going to go and defend his project, or you can say justify that his project is a profitable one, whereas how did it turn out to be a negative one in the eyes of management. Okay, so we're going to go to an example, but now over here, if you see, I'm going to be doing a slight twist in the example. Till now, all the things were pre-written in the sheets and we used to go through the slides and all. Now I'm going to build up the entire scenario in front of you guys. Okay, so even you have a realistic example, realistic feel of how the things are building up on a step-by-step basis. Okay, so let's say the management of Mr. X wants to discontinue his project. So they show him the records that this is how your project summary is being shown. So first of all, we'll say that the project manager, Mr. X, received the following income statement summary, based on which it was decided that his project is supposed to be discontinued. Okay, so here we're going to have income items. This is for quarter 1, quarter 2, quarter 3. Okay, perfect. A couple of minutes more, guys. Just hold on. Okay, so he receives an amount of total sales value generated from his project, or you can also say it as a revenue that is expressed in terms of dollar value. Okay, then we have the net profit for his projects quarter on quarter basis. Then you have the net profit expressed in terms of percentage, which is a net profit divided by total revenue percentage. That's it. Okay, so how do you think things will build up? First, we have our numbers over here. 280,000. Just 1 second. I believe this whole formatting needs to be taken care of at once. 280,000 for quarter 1, 286,000, a slight increase in the revenue, and 300,000 in quarter 2. The net profit posted for quarter 1 was $42,000. For quarter 2, it's reducing $40,000, and for quarter 3, it remained the same. But if you see, comparatively to the increase in revenue, it's remaining the same. So ideally, it is decreasing in that sense. Okay, in the relative sense, it's decreasing. Now we'll calculate the percentage of this thing. That is the net profit divided by the profit percentage. That's 15%. Oh, my bad. This is expressed in number values. We apply the same formula over here, quarter 2, quarter 3. So as you can see, it's decreasing profits. Okay, the net profit percentage, it's decreasing quarter on quarter. And based on this statement, based on this summary, the management is right in taking the call that you need to scrap the project because it's turning out to be a loss-making one. Better to stop it when you still have a chance than incur the entire loss and then regret, right? Now let's see how Mr. X was able to defend his project over here. If he did not have the financial bandwidth, the financial understanding, obviously he would have said, it's fine. I do realize the project is making a loss quarter on quarter. It's better to shut it down. But here, because Mr. X has a brief insight, or you can say a detailed insight into how the financial worlds work, how the financial analysis is relevant to project management, he asks management to provide him with the detailed financial statement so he can do a postmortem of his project for himself and then come back with the result. And then on asking for a detailed income statement summary, Mr. X receives the following. Okay, this is going to be the same. We'll use the same template over here. The total revenue are going to remain the same. Then we have the cost of revenue, that is all the direct costs. then you get the gross margin on deducting the. You not worry about this thing. I'm just trying to show you how things shape up so you have a realistic view. I'll be explaining everything in detail once I finish my creation of the entire table. Okay, just hold on for a while. Operating income, then you have other expenses, and then finally you have the net income. Oops. Okay. We'll try to build a formula based way. Okay. Okay, say. So for earning $280,000, the cost of revenue was $200,000, and based on which you get a gross profit, that is total sales or revenue minus the cost of revenue, that gives you the gross margin. Then you have the operating expense of $25,000. You have operating income of $55,000. Okay, the operating income is basically gross margin minus the operating expenses, that gives you the operating income. You have other expenses allocated to this project, that's $14,000, that gives you the net income of $41,000. Okay, okay. So I just realized I made a typo error over here. This one is supposed to be $41,000. This is supposed to be $39,000, and this is supposed to be $38,000. So now if you're wondering why is this amount at the net profit percentage not being changed, they do change over here, but the fraction is changing. That's why it's just expressed in a 0 decimal factor over here. If I increase a decimal point over here, so you see if it was $42,000, it comes to $51,000 and so on. But yeah, I'm just skipping it for the safe side to map up with what computations I have made, so we have a quick understanding of the entire sum. So now for quarter 2, the cost of revenue was increased marginally. So again, you have the formula over here, that is going to be total revenue minus the cost of revenue, that gives you the gross margin. You have the operating expenses at $23,000. They reduced in a way. Ideally, they reduced entirely. And then you have other expenses of $23,000. So here it's going to be operating income minus other expenses, that gives you the net income of $39,000. The same way we'll put it here. The quarter 3 has a cost of revenue or $205,000, that gives you the gross margin of 95. Operating expenses of $26,000, that gives you the operating income of $69,000, and other expenses allocated were $631,000. That gives you the net income of $38,000. Now this net income maps over here with the net profit over here. Ideally both are the same amounts, to be honest. Okay. Now, based on this detailed analysis, Mr. X is now in a position to draw some conclusions, to pick up some ratios and then go back to management and explain them where things have gone wrong and get a chance to continue the project or then take a call with the management to discontinue the project. But till now, I hope you're clear on how you analyze the detailed statement over here. Once again, we'll go through it quickly. Your gross margin is nothing but total revenue, the sales minus the cost of revenue, minus the cost of generating that sales, okay, minus the direct cost involved to fulfill those sales. Then you have the operating expenses reduced from the gross margin. Operating expenses are basically those expenses which are required to keep the project ongoing, okay. For example, you need to buy some machinery for the project, specifically for this project, and you need to pay a rent every month, a license fee every month. That is a part of the operating expense to keep the machinery on and on, to maintain it on and on for this project. Then you have an operating income. Operating income is basically your gross margin minus your operating expenses, that gives the operating income. Then you deduct the other expenses from your operating income. This could be anything, a common HO, common head office expenses allocated throughout all the projects, and interest cost applicable, a blanket interest cost applicable to all the projects because the financing is taken for the common benefit of everyone, and so on. That gives you the net income, final net income of 41,000 for quarter 1, 39 for quarter 2, 38 for quarter 3. Now let's see how Mr. X was able to draw some meaningful insights in this and defend his budget and defend his project ideally. And that will study in the next session one-on-one what things are to be taken into account. For now, I hope you're clear with how we built up the entire thing, a summary of the income statement, and from that we went on and obtained an entire detailed income statement from the management to do a postmortem on why things should be stopped.